Trump's allies are panicking, the markets are tanking, and it all started on April 2nd, when President Trump declared Liberation Day and hit nearly every country with sweeping new tariffs. The fallout? Stocks are crashing, business leaders are furious, even Trump's biggest supporters are starting to turn. But here's the thing, it's not over. Trump still has options, so does Congress, and what happens next could shape the future of the US economy. So what exactly did Trump do? Why are even his allies speaking out? And is there still a way to fix this? Let's take a look. Liberation Day was a significant event in global economics. Trump used April 2nd to announce sweeping tariffs against some of the US's largest trading partners, and in one case, an island that's home to only penguins and seals. The US president imposed a 10% universal tariff on all foreign imported goods, alongside what he dubbed reciprocal tariffs on several countries that he claims are cheating America through tariffs, hidden or otherwise, of their own. Trump announced that his new universal tariffs will go into effect on April 5th, meaning they're active as you watch this video, with his reciprocal tariffs activating on April 9th. His mood was jubilant as he made the announcement. "This is one of the most important days, in my opinion, in American history," Trump declared while standing on the White House lawn to announce his new tariffs. He claimed that the US has spent decades being looted, pillaged, and raped by many of its trading partners, going so far as to claim, in many cases, the friend is worse than the foe. And it was some of the US's allies that were hit hardest by Trump's tariffs. The European Union, or EU, was hit with a 20% tariff, amidst Trump's claims that the bloc charges a 39% tariff on its imports from the United States. At least Canada and Mexico were exempted from this latest tariff volley. That will be little solace to either, as they are already targets of massive tariffs that are separate from those imposed on Liberation Day. Among the hardest hit was China. Trump slapped the nation with a new levy of 34%, which will go on top of the 20% tariff he'd already implemented against many Chinese goods, in what Trump claimed was a response to China having an unfair tariff rate of 67% on US imports. The motive for Liberation Day becomes clear. Trump was looking for economic revenge. He told the assembled press on the White House lawn that many of the supposed tariffs being used against the US were not as direct as the ones he implemented. The tariff calculations included currency manipulation and trade barriers, set up to stop the US from making deals, the president claimed. But even as he announced his tariffs, Trump said he was showing mercy. Any tariff he levied would only be half of what the receiving nation used against the US, the president claimed, while noting that the US people are very kind to only be going this far. If nothing else, Trump was following through on a promise he made on the campaign trail. He'd floated the idea of a universal tariff before he became president, meaning this latest action will be seen by some as a man making sure he keeps his promises. This won't mean much to those who've been affected by the global shockwaves these tariffs have caused, and that includes some of Trump's closest allies. The days following Trump's tariff announcement were marked by absolute turmoil in the US stock markets. Within days, China had already announced that it would be implementing retaliatory tariffs of its own, elevating the trade war Trump began on April 2nd. Investors started losing money, a lot of money. By April 4th, all three of America's major stock indexes were down. The S&P 500 dropped by almost 6%, with the other two indexes falling by 5% in what the BBC calls the worst week for the US stock market since 2020. Of course, you'll remember this year as the beginning of the COVID-19 pandemic that racked businesses across the world. It wasn't only the US stock indexes that took a massive hit in the days after Liberation Day. The UK's FTSE 100 dropped by almost 5% in its steepest decline since 2020. Indexes and exchanges in France, Germany, and throughout Asia experienced similar falls, resulting in global stock markets losing several trillions of dollars in value. $5.6 trillion to be exact, as of the time of creating this video. Some major financial players, including JP Chase, believe that Trump has placed the world on track for a widespread recession. It now says the odds of a global recession starting in 2025 stand at 60%, which is a 20% increase over the 40% odds the institution predicted earlier. It said that tariffs could drive economic growth in the US down by 2%. Others were less worried. Those include Tim Pagliara of CapWealth, which is a wealth management firm based in Tennessee. Pagliara said, "These shifts in the market that we're seeing, they're violent because things go down a lot quicker than they go up." The CapWealth chief executive said that Trump was attempting a big reset, designed to fix a trade imbalance that has existed between the US and its trading partners for his entire career. "We're going to level the playing field on some of these relationships that have just gotten out of balance," Pagliara declared when speaking to the BBC. Perhaps that's the case, but nobody can deny that we've seen some wild market shifts in the past few days. By April 6th, the US's three major indexes were still dropping. though not at the same rate as seen during the initial days after the Trump tariff announcements. The S&P closed down at 0.2%, with the Dow Jones dropping by 0.9%. But Nasdaq, which is a tech-focused index, managed to experience slight growth. It was up 1%, powered by a rally from chipmaker Nvidia, which finished the day 3.5% higher than it started. There's still a lot of uncertainty, though there at least seems to be something resembling stabilization coming. As for Trump, he's bullish in the face of all this economic turmoil. On April 7th, the US president was asked if he would be looking at a potential pause in his tariffs given the issues they caused. Trump's simple answer was no. "We're not looking at that," Trump said, as he explained that many countries were getting in touch with the US to negotiate deals. Keep that in mind. Those deals are one of the potential solutions to Trump's tariffs that we'll discuss later in the video. "If I didn't do what I did over the last couple of weeks, you wouldn't have anyone who wants to negotiate," Trump declared. "Now they're coming to us." That may be the case. However, it doesn't change the fact that many are unhappy with the tariffs Trump has implemented. And among those unhappy people are some of those who consider themselves close Trump allies. On April 7th, Axios published an article claiming that some of Trump's closest allies on Wall Street are squirming in the wake of Liberation Day. And why wouldn't they be? The near-constant decline of America's three major indexes is having shocking effects on their wealth, and they want to see something done about the problem. Among those Trump allies who are starting to hit back at the US president is Jamie Dimon, the CEO of JP Chase, which you'll remember is now predicting a 60% likelihood of a global recession. Dimon published his annual letter in the wake of Liberation Day. He warned that Trump's tariffs are going to fuel inflation and stunt growth in a US economy that is already fairly weak. That will be worrying for US consumers. The US's annual inflation rate has only just started to come down to acceptable levels, having dropped to 2.8% in February compared to 3% the month before. Annual core inflation has fallen to 3.1%, which is the lowest it's been since April 2021. If Dimon's predictions are correct, all of that hard work is about to be reversed, which means only one thing for consumers: prices are about to rocket up. The quicker the tariffs issue is resolved, the better, claimed Dimon. In the short run, I see this as one large additional straw on the camel's back. That back may be about to break. Dimon isn't alone in being a Trump ally who is now starting to see the US president in a different light. Bill Ackman, who manages a hedge fund and threw his support behind Trump on the campaign trail, urged the president to implement a 90-day pause on his tariffs. "Business is a confidence game," claimed Ackman, with the United States currently being in the process of destroying confidence in our country as a trading partner, as a place to do business, and as a market to invest capital. Other hedge fund managers are similarly worried. Daniel Lieb claimed that there were potential conceptual errors in Trump's tariffs, adding, "It will be a test of the administration's judgment versus ideology how they resolve this over the weekend or coming days." Howard Marks, who runs Oak Tree Capital, cautioned that Trump should not underestimate the benefits we've gotten from globalization. But perhaps the most important dissenting voice is that of a man who's established himself as one of Trump's most crucial allies during the first few months of his second presidential term: Elon Musk. The Tesla and SpaceX CEO hasn't directly come out against Trump on the tariffs issue. However, April 6th saw him speak via a video link to the Italian far-right political party Lega. "I hope it's agreed that both Europe and the United States should move, ideally in my view, to a zero-tariff situation, effectively creating a free trade zone between Europe and North America," Musk said during the video call. Musk went even further, claiming that this freedom should extend to the movement of people between regions, with Musk saying that's the advice he's giving to Trump. As Euronews points out, those comments stand in stark contrast to Trump's Liberation Day. The more cynical among us suggest that Musk is now opposing the president on this issue because tariffs impact his companies more than he's anticipated. Tesla's shares have already been in freefall since Musk threw his support behind Trump, tumbling 50% between their all-time high in December and the days leading up to Trump's tariff announcements. They're set to go lower, according to Futurism. It says that Daniel Ives, who's a notable Tesla bull, has downgraded his price target for Tesla stock from $550 to $315, a move that suggests market sentiment is moving away from Musk's automaking company. Even Musk said in an X post, "Important to note that Tesla is not unscathed here," when talking about the impact Liberation Day had on his company. All of this opposition creates an interesting situation for Trump. As we mentioned earlier, the US president often suggested a universal tariff when he was on the campaign trail. He, along with many of his supporters, will see Liberation Day as an example of Trump keeping his promises. That's exemplified by the fact that Trump has already said that there will be no pause on his tariffs. Still, having so many of his allies come out against him on the issue must sting Trump. That sting might be so bad that Trump could start looking for a way to reverse his decision. An off-ramp, as fortune writer Gary Shapiro calls it. There are several of these ramps available to Trump, according to Shapiro, who's the CEO of the Consumer Technology Association, and one of those ramps is something that we, and Trump, have already mentioned: making deals. This is Trump's preferred option, according to Shapiro. He notes that the Trump wish list may include lower tariffs from these countries, commitments to buy American goods, or investment in the US. Shapiro suggests that Trump is using his universal tariffs as leverage. He wants to bring major manufacturing nations such as China and Vietnam to the table so he can cut a better deal with them for the products they deliver to the US. It's a simple scenario. Trump hurts those countries now to create a better deal for the US later. Shapiro even suggests that this could lead to a best-case scenario where Trump's actions push the world to lower or even zero tariffs, which is right in line with what Musk says he hopes to see. There's already evidence that some nations are coming to the US to negotiate. On April 7th, Forbes reported that Trump claimed he's willing to make fair deals with any country that's willing to make concessions to the US. "We're going to get fair deals and good deals," said Trump, "and if we don't, we'll have nothing to do with them." The White House's National Economic Council director, Kevin Hassett, says that Liberation Day has already pushed over 50 countries to reach out to the US, suggesting that forcing negotiations was Trump's plan all along. The EU, for instance, has supposedly offered the US a 0-for-0 tariff on several industrial goods. Trump may not take that deal. He's been tough on the EU since he became US president. The fact that the offer is being made may show him that his tariffs are working as intended. Bangladesh has promised to dramatically increase its US imports in return for a pause on the 37% tariffs Trump has levied against them. The UK thinks it can reach a deal with Trump to remove its 10% tariffs, and Trump has already ordered a meeting with Japan to discuss their tariff situation. It seems clear what Trump intends his main off-ramp to be. He's created economic turmoil among US allies and enemies alike. That turmoil brings those nations to the table, allowing Trump to negotiate what he sees as better deals for the United States. We may end up seeing a cascading effect from there. If Trump makes tariff deals with individual nations early, he can dangle them in front of the rest of the countries affected by his tariffs like a carrot on a stick. "Look what happens when a country comes to us directly," Trump could say. "They get their tariffs reduced or eliminated because they make a deal. The same could happen for you." Of course, this off-ramp strategy relies on the nations affected having a desire to talk in the first place. Trump can't guarantee that. And on the flip side of this strategy, some countries are already planning to hit the US with tariff responses of their own. China, who we mentioned earlier, levied a 34% counter-tariff on the US in response to Liberation Day. Trump shot back with the threat of an extra 50% tariff against China on April 7th. If it doesn't withdraw that retaliatory tariff, far from bringing China to the table, Trump may be sparking a trade war with a country responsible for an estimated $582.4 billion of trade with the US in 2024 alone. If more countries respond to Trump's tariffs as China has, the negotiation off-ramp may send the US hurtling into trade oblivion. But there are other options, says Shapiro. Action by Congress is one of them. Shapiro notes that it was Congress that granted Trump the authority to implement his widespread tariffs, and it's Congress that can take that authority back. Policymakers are already hearing from unhappy constituents, Shapiro writes. If they face the prospect of a blue wave in the 2026 midterms, they may decide that risk outweighs the president's wrath. Whether Congress plans to do anything about the tariffs is up for debate. Shapiro notes that we're already starting to see some hints of a Republican rebellion. For instance, April 2nd saw a bipartisan group of Democrat and Republican lawmakers pass a resolution refuting the economic emergency Trump's team wants to implement to justify the tariffs placed on Canada. That small groundswell of Republican rebellion could grow if the Liberation Day tariffs continue to have negative effects, leading to Congress voting to strip the US president of his tariff-creating powers. However, some, including AP News, suggest that isn't likely to happen. It says that while some Republicans in Congress may be talking privately about reclaiming Trump's power to levy tariffs, very few seem to want to turn that talk into defined action. They prefer to focus on Trump's bills relating to tax breaks and spending cuts, essentially burying the tariffs issue in the sand so they can emphasize bills they believe will play well to the American people. Senator John Barrasso, who is a Republican out of Wyoming, seems to sum up the mood in Congress. The president is a deal maker, if nothing else, and he's going to continue to deal country by country with each of them, he says. In other words, Congress may be placing its eggs in the negotiation basket to avoid having to strip Trump of his tariff powers and cause a rift in the Republican Party. That approach may switch if deals aren't made, Congress forcing Trump down the removal of tariffs off-ramp. Finally, there's the option some are already considering, litigation. Shapiro claims that this is an option. After all, a plain reading of the statute President Trump used to apply these tariffs makes it clear that it was written for genuine emergencies, he writes in Fortune. Do other countries supposedly having tariffs constitute an economic emergency for the US? Trump certainly seems to think so. He's already pushing for a state of economic emergency to be declared. However, the Liberation Day tariffs stretch that term well beyond any rational meaning, says Shapiro, meaning lawsuits are going to be filed. Scratch that, they're already being filed. On April 7th, The Guardian reported that a libertarian group funded by Charles Koch and Leonard Leo has already mounted a legal challenge to the Trump tariffs. The New Civil Liberties Alliance previously supported Trump but is now standing against him. It argues that Trump's use of the International Emergency Economic Powers Act, or IEEPA, is unlawful. The IEEPA is the statute mentioned earlier, and the group's opposition to its use is especially notable. Leonard Leo advised Trump on the appointments of 3 conservative Supreme Court justices during Trump's first term as president. He was about as deep a supporter of Trump as you can get, and now he stands opposed to him on the tariffs issue. If more lawsuits like these are filed, Trump may back down. Alternatively, he may choose to fight them. A lawsuit is rarely something that gets wrapped up in a matter of days, says Shapiro. Judges rule slowly, appeals take time, and the judicial approach is fraught with risk, tardiness, and a certain randomness. In the worst-case scenario for those filing the lawsuits, the courts may rule that Trump's use of the IEEPA is 100% legal, setting a precedent for even more tariffs in the future. So what does all of this mean for Trump's tariff? Right now, they're not going anywhere. Trump has said so himself. It appears the US president is using his tariffs to force other countries into negotiations, giving him the off-ramp he's looking for. If that strategy works, Trump will be able to claim that he's gotten better deals for the US across the board, and the tariff situation may resolve itself. If that doesn't work, Congress could strip Trump's tariff powers, while legal challenges could force a change. However, will either of those options work? Let us know what you think in the comments. Are Trump's tariffs really part of a master plan he's using to spark up negotiations? How much damage needs to be done to the US economy to push more of Trump's past allies into opposing him? How do you see the US's economic future, particularly in the long term? Tell us your opinions below, and remember to subscribe to The Military Show for more commentary on the latest moves by the US president. Now go and check out Trump Never Saw This Coming. Canada just blocked US access to Alaska. Or click this other video instead.